Welcome to this week's look at the state of the New York City real estate market. This report is for the week of June 9th to the 15th. Wow, here we are now in the middle of June, and surprisingly, the real estate market in New York continues to hold pretty strong. So we're going to get into the details in just a moment. As always, if you have any questions at all, please post them below. There were 37 contracts signed in the luxury market last week. That is 3 more than the previous week. Condos outsold co-ops 20-10, and there were 7 townhouses in this group. The number one contract was Penthouse 2 at 111 Murray Street. It was a sponsor unit asking just under $34 million. It was reduced from $45 million when the building started sales back in September of 2015. The penthouse condo has just under 7,500 square feet. It includes 5 bedrooms and 6.5 bathrooms, 2 terraces, 1 off the living room and 1 off the primary bedroom that total 222 square feet, plus beautiful views of the Hudson and the East Rivers. This building has 20,000 square feet of amenities that include a fitness center, pool, hammam, salon, playroom, game room, lounge, and a landscape terrace. The number 2 contract was apartment 52C at 432 Park Avenue. It was asking just under $17 million, reduced from $19 million when it was listed in September of 2022. This condo has almost 3,600 square feet, including 3 bedrooms and 3.5 bathrooms. It features almost 13-foot ceilings and 10 by 10 windows. Wow. It also has a corner 29 by 29-foot living room with north views of Central Park and west views to the Hudson River. 432 Park is 96 stories high. It is concrete and glass designed by Raphael Vinoli. It can be seen from almost anywhere in the 5 boroughs. Amenities in this building include a fitness center, 75-foot swimming pool, private dining room, parking, garden, and a children's playroom. The total weekly asking price sales volume in the luxury market, $331,655,000. Average asking price, $8,963,649. Median asking price, $6,350,000. Average discount from original ask to last asking price, 14%. Average days on the market, 737. Even though here we are, middle of June, and yet the contracts in the luxury market rose by 3 from the previous week. I have to keep an eye on this spring market to see if it doesn't continue on into the summer. We don't know yet, of course, but it seems to still be going pretty strong. Okay, that's it for the luxury market. I'm going to switch now, take a look at what's going on in Manhattan. Manhattan new supply, 307 properties came on the market. That's actually down 11% from the previous week. Contracts signed 240, that's up a little over 5%. Off market also dropped a little, about 11%. 179 properties came off the market. The monthly supply for Manhattan, 1,539 new properties came on the market. That's down a little over 21%. Contracts signed also down almost 10%, 989. Off-market properties, 684. Wow, up about 47%. This market pulse continues to show us dropping this balance between supply and demand. We're seeing that we're kind of in that buyer's market territory. And the liquidity chart, this is that 30-day moving window of contracts signed, 989. That is a drop of a little over 6% from last month, and it is up a little over 3% for last year. We'll get into some additional details about what's going on in Manhattan and actually in the whole market at the end of this report, but for now, we're going to move on and take a look specifically at what is going on in Brooklyn. So the new inventory in Brooklyn was down a little bit, just like with Manhattan, this time about 5% for the week. 205 properties came on the market. 185 contracts were signed. That is up a little over 31%. And the off-market properties for the week, a little over 14% of 71. The monthly new supply in Brooklyn, 896. That is down a little over 22%. Contracts signed up a little over 1% at 671. And the off-market properties, is down almost 2.5% at 249. The Brooklyn market appears to be a little more neutral and balanced than the Manhattan market, but it too has kind of gone up and down a bit, as you can see from the chart. The 30-day moving window of contract activity, as you will see in the liquidity pace chart, is 671. That is up a little over 7% from last month and up almost 13% from last year. That's it for Brooklyn. Any questions, post them below. Now I'm going to wrap it up, share some additional information with you, some mortgage information, some further details, and some interesting information about what is going on with rentals now that this FAIR Act is in place. And of course, as always, strategies to help you be successful in this market. So stick around for those. As we said, in the luxury market, 37 contracts were signed last week. That is 3 more than the previous week. 11 of those were in the trophy category, meaning they were priced at $10 million and above. Surprisingly, 18 of those were uptown and 19 were downtown. We've been so accustomed to seeing more uptown listings being signed into contract versus the downtown properties. So nice to see that downtown is outperforming, at least for this week, and at least by one property, the uptown market. There were 20 condos, there were 10 co-ops, and there were 7 townhouses. If we stand back and look at the Manhattan and Brooklyn markets, we can see that both the overall and weekly supply remain seasonally on trend, while the overall demand ticked up. And weekly contract signings achieved some growth there for the second week in a row. I don't know if this is the start of a new trend, but it would not be unreasonable to think that this spring market is going to extend on into the summer. This may be, of course, because we kind of hit pause in April after getting a great start in March, but it remains to be seen. In Brooklyn, kind of the same thing. Overall, the supply remains on trend, almost exactly where you would expect it to be this time of year. The demand, on the other hand, has really accelerated over the last week. Again, hard to say whether this is going to be something that we're going to continue to see, but it was really nice to see that pop of contract signing in both Manhattan and in Brooklyn. So let's see, maybe this will continue into the summer. Time will tell. Looking at the Manhattan and Brooklyn market conditions, let's sum it up by saying the supply remains on trend and the contract activity seems to be rising. The total supply in Manhattan, 7,325, Brooklyn, 3,565. Pending sales in Manhattan, 3,408. In Brooklyn, 2,184. Off-market in Manhattan, 3,318. Brooklyn, 1,655. The average days on market, Manhattan, 66. Brooklyn, 48. Not bad for either one. The liquidity pace, that 30-day moving window of contracts signed, Manhattan 989, Brooklyn 671. Sharing some charts with you, looking at the mortgage rates, they basically are staying kind of the same, right? Week over week, we're kind of seeing the same rates. We're not really hearing anything about rates coming down, so a lot of buyers have decided they're just going to try to work with what is there. And look, if the rates work for you, great. If they don't work for you and you're not paying cash, then you may well be sitting this one out. This leads me to the 2 charts I want to share with you that are looking at the FAIR Act and comparing Manhattan and Brooklyn rents before the FAIR Act went into effect last week, and how the change in median rent, if there are changes in median rent showing, post FAIR Act. In Manhattan, it seems that the change in median rent is showing an increase of $550 or 11.6%. of course, it is too early to know whether it's really going to have an effect on the rents, pricing. We will definitely need more data to know for sure, but it's really interesting. So that's what happened in Manhattan. In Brooklyn, before the FAIR Act, between June 1st and June 10th, Brooklyn rates had a median rent of $4,000. After the FAIR Act, that rent increased by $108 to $4,108. This is a 2.7 increase since the FAIR Act was adopted. As I said, we're going to continue to monitor the data because, this is not really enough information to know whether this is the beginning of a new trend post FAIR Act or whether this is going to be just kind of a one-off thing, or I want to call it like a bit of a knee-jerk response to the FAIR Act being instituted. Here we are. We are in the middle of June, and yet it doesn't look like the market's really slowing down. Contract activity is up. We've got good inventory. Buyers are still engaged in the market. Sellers still want to sell. So what do you do if you are a seller or a buyer? Well, if you are a seller, you hear me say this again and again, but this is the best advice I can offer you. Buyers are in the market. So if you want to sell your property, now is the time. And if you are finding you've been on the market and you're not getting the traction that you want, adjust your price. That is the surest way to get things moving and get your deal done before, at some point, we hit the summer slowdown. Buyers, I mentioned that inventory is strong, so you definitely have more choices. Mortgage interest rates are kind of what they are. If you can work with those, great. Or if you're paying cash, then you're not really that impacted by those mortgage rates. They are going to probably hold steady, so don't wait around thinking that suddenly they're going to drop and you're going to get a much better rate. If you can live with these, then start making your offers. With this rising cost of renting, and we just talked about this a little bit with this institution of the FAIR Act that is now in place here in New York City, you'll do the math and decide whether it is better for you to rent or to buy something and keep that money in your pocket so that you're not just, let's call it, throwing it away every month. That is it for this week's look at the state of the New York City real estate market. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work they do helps me to help you to make great decisions. I'll be back next week with the very latest news on what is happening in the New York City real estate market. In the meantime, take care.